All right, today we're diving into something pretty wild. It's a provocative market theory that's been making the rounds online, and it claims that a massive, historic, market-wide event isn't just on the horizon, it's already kicking off. Let's get right into it.
So it all starts with this one really bold claim. The analyst behind this wants you to know right from the jump that this is not just another GameStop theory. Sure, they might use it as an example, but this idea is way, way bigger. It's about the entire market.
Now, to really get what this analyst is predicting, we've got to jump in a time machine and head back to late 2021. Because according to them, that's when a huge market rally got stopped dead in its tracks. Okay, so try to picture it. November 2021. The market wasn't just doing well. In their words, it was aggressively coiled. It was like a spring, wound tight, ready for a massive breakout. The thinking was that it had much, much higher to go. But that massive breakout, yeah, it never really got off the ground. And the reason, according to this theory, is that a monkey wrench got thrown right into the gears. We're not talking about just one thing, but a whole series of big macroeconomic events that hit all at once and just jammed up all that momentum.
And here's what that monkey wrench actually was: a series of bottlenecks. You had the market cycle topping out, then boom, aggressive rate hikes started. Then war escalated. It was like one thing after another, all pushing the market down to those lows we saw in late 2022. It was like someone slammed the brakes on the whole economy.
Now this is maybe the most important part of the whole backstory. It's a metaphor from physics. The argument is that all that upward energy in the market, it didn't just disappear. It was just suppressed, stored away, kind of like coiling a spring tighter and tighter. You're not getting rid of the energy, you're just building more of it, waiting for it to be released. Okay, so you're probably thinking, that's a cool idea, but is there any proof? How can you even prove something like that? Well, the analyst points to one very famous stock as their proof of concept, GameStop. They use its chart as the main piece of evidence for this entire market theory. So let's break down this GME model. They point to a chart they shared before that recent squeeze in 2024. And on that chart, they claimed this old price level, what they call the point of initial short, was going to act like a magnet for the top of the rally. And get this, they say that's exactly what happened. They also point out that Roaring Kitty himself showed a really similar chart. The big takeaway? They believe GME is coiling up right now in the exact same way it did back in late 2021.
All right, so we've talked about the past, how all this energy got bottled up in 2021 and 2022. Now, here's the pivot. The analyst's whole thesis is that right now, we are living through the great unwinding. All those headwinds that stopped the market, they're now turning into tailwinds. And this slide just lays it all out side by side. It's a total reversal. Where you had escalating wars, now they're seen as ending. Those aggressive rate hikes are now predicted to, quote, pencil dive. High inflation has cratered. And all that uncertainty around crypto, it's turning into government adoption. It's like every single negative is flipping into a positive. And that's the bottom line, right there in the analyst's own emphatic words. It isn't just one or two things getting a little better. In their view, every single pressure point that caused the big problem in the first place is now releasing, all at the same time. Okay, this is where things get really interesting. This is where we zoom out from just one stock and see how this theory applies to, well, everything. The scope of this prediction is about to get a whole lot bigger.
And here is the big reveal, the twist. The analyst basically comes out and says, look, I just used GameStop to get your attention. GME was never the main point. It was just the hook, the loudest, most dramatic example to get you to see a pattern they believe is happening all across the board.
So what is this pattern they're seeing everywhere? It's actually a pretty simple three-step process. First, an asset gets a big push upwards in price. Second, that push takes it right back to those key levels from November 2021, right before the monkey wrench hit. And third, once it hits that level, it starts consolidating into what they call a massive bullish structure.
Case in point, number one, Dogecoin. The claim here is that it followed the three-step pattern perfectly. It had a big price impulse, squeezed right back to its November 2021 levels, and is now building out a new base for the next move.
And it's not just Doge. Here's example number 2, Ethereum. And again, it's the same exact story. A recent price surge squeezed it right back to levels it hadn't seen since, you guessed it, November 2021. The repetition here is the whole point.
Okay, so let's recap. We have this idea of stored energy. We have the bottlenecks unwinding. We have a pattern that's apparently repeating across different assets. So where does all this lead? To one single, pretty dramatic prediction.
But wait a minute, if this setup is so obvious, why isn't every analyst on Wall Street screaming about it? Well, the theorist has an answer for that. They call it the wall of denial. The idea is that mainstream finance pros, the TradFi bros, are just too blinded by their old school models or political biases to see what's really happening.
And here it is, the grand finale. The analyst believes we are in the early moments of a full-blown rampage squeeze. And to give you an idea of the scale, they compare it to that infamous January 2021 surge, but on steroids and myosin blockers. And it's not just one stock, it's market-wide.
So let's be crystal clear. They are not just calling for a good year or a bull market. They are framing this as a potentially biblical event. You know, the kind of thing that gets its own chapter in the financial history books for decades to come.
So that's the theory. And it leaves us with one massive question. Is the market truly coiling up all that stored energy for a historic once-in-a-generation release? Or is this just a really fascinating but ultimately contrarian theory that's reading the tea leaves in a completely different way from everyone else? That part is for you to decide.